Good day. While we all contemplate life under lockdown and the daily running of our personal affairs, it's suitable to also think about your investment portfolios and how your fund managers are managing through the crisis. Futuregrowth manages a range of fixed interest funds, benchmarked to the STEFI, the All Bond Index, and the inflation-linked bonds, and notably quite a lot of credit assets and credit lending in our portfolios. That means we lend to corporate South Africa and through them to individual South Africa, SMMEs and homeowners and such. So as a starting point, markets have dried up. Illiquidity has emerged in the government bond market, mostly a very liquid market, and indeed it's very difficult to trade government bonds, short and long term, and therefore it's somewhat difficult to manage fund duration risk in the current environment in the bond funds. Likewise, inflation bonds, a very liquid market, very hard to get things executed, and worse than that still, the listed credit market, which was always illiquid and only has become more so in the current environment, which means the JSE's prices on the corporate bonds are stale and probably unreliable. The other challenge, of course, is keeping our team safe, and that has entailed Futuregrowth working from home, having the whole organization able to work from home, although we are considered a part of the financial sector, and therefore we're able to go to the office. In fact, we are not doing that. Our business continuity plans were well planned, well practiced, and currently well executed, so the machine is running and running effectively. Portfolios are being managed, risks being taken, dealing being done, compliance being adhered to. A third key element is staying in touch with our borrowers, organizations we've lent to for many years, whom we know, have analytical coverage of, and can work closely with to ensure that they stay liquid through this crisis. There will be another side, and you don't want companies that shouldn't suffer to be impaired from their businesses of providing services and finance to the domestic economy. And so we're doing that to the extent it's reasonably possible, while also meeting fund liquidity needs, client liquidity needs, and managing risks in portfolios. So the other element of managing open-ended funds is to ensure your assets are valued properly. The credit teams work quite hard to revalue the assets, take account for the rising cost of capital in global markets, and particularly in South Africa, as we've seen the degradation of the interest rate, of the economic outlook. That obviously leads to a downgrade of credit, and as I said, higher cost of capital, so you have to adjust all your credit pricing for that, and that's being done on a rolling, continuous basis to make sure our funds remain fairly valued. So in conclusion, I invite you to read the attached document, and please stay home and stay safe, and let's all get through this together. Thank you.